Dave, how are you, Dave?
Good. How you doing?
Thanks for calling. What's going on?
Not too much. I have a sort of a tie-in with the last caller, but not exactly. I mean, basically, I have the same kind of model that you're talking about, and this has nothing to, all the stuff that you're talking about, whether you're generally optimistic or not. That doesn't really matter if banks are automatically pessimistic.
Yeah, it's a good question. So you can't get financing like you could a couple of years ago, but you can get financing today exactly like you could 10 years ago or 15 years ago. In other words, people put a lot of emphasis on the idea that banks are tightening standards. The banks are normalizing standards, all right? The way that they're lending today in the mortgage business is exactly like they did back in 1995, all right? And so we got used to something different, but that wasn't the reality, and we saw the results of them loosening the standards. So banks are lending. You have to be a really good credit risk for them to do it right now. They're tricky when it comes to dealing with loans for residential investment in that you basically, bottom line in this is that you have to put a big hunk of money down as a down payment. Otherwise, the banks don't want to talk to you. And I'm good with that, because you put down 30%, 40% on a piece of investment property, and you're going to be able to generate really solid cash flow because your mortgage is lower. It's just basic math. Your mortgage is lower, it's smaller, so you're able to cover your costs better. That gives you staying power, meaning, you've got a smaller mortgage, you've got tenants that are paying it off, you've got the ability to ride this thing all the way to the promised land, and it might be 8 years away, and so you have to make sure you have that staying power. But don't believe them when they say the banks aren't lending, because they are to good credit risks.
They are. Well, yes and no. But the thing is, even if, like in my credit, I mean, I've never been a day late or a dollar short. I have 10 houses, which are kind of like, 2 to 4 family, basically. But once, overnight with the Lehman crash, it went from getting residential mortgage terms to pushing you automatically into commercial loan territory,
right,
which is a reset every 5 years. So you have like basically short-term financing on a long-term asset, which is
not a good fit. Yeah, that's a really good. Good
Right.
you mentioned that. That's a good thing for people to understand. When you own
So
10 properties, the standard the standard mortgages that are out there, backed by Fannie Mae and Freddie Mac, that most of the mortgage companies, even most of the banks, are actually lending you those loans. They cap it at 10 loans, 10 investment properties. And so once you go to the 11th, you turn into a whole different kind of animal here. And it's true that you wind up having to qualify like a commercial loan. And a commercial loan doesn't say, show me your numbers, I'll see if you fit into the program. Commercial loans also look, they look under the hood. They want to know your other interests. They want to know, they evaluate you as a borrower kind of in a more comprehensive way. So it does get more complicated at that 10 properties plus level, but I think it's going to change. I don't know if you caught this, Dave, but about 3 weeks ago, the federal government, HUD, the Treasury Department put out what they called a request for information from the private sector. They wanted private sources of capital to give suggestions to Washington, imagine that, on how to convert foreclosures into rental properties. In other words, what can we do at the government level to help turn 500,000 foreclosed properties into rental stock? And the advice they're going to get, because they got it from me, but they're going to get it from a lot of other people who know something about this, is get out of the way on some of these regulations that keep investors from borrowing. For example, why put a cap on 10 properties? If you have 10 properties and they're performing and you're paying the loans, they should want to loan you 90 more mortgages for those properties because you've obviously demonstrated a capacity to be able to handle that. And so that's one of those things that I think has been established from an earlier time in history when they wanted to cap the number of people out there that were investors because they were trying to encourage homeowners to buy properties, and they were actually holding investors back. So watch for that to potentially change over the next year as A, they start thinking deregulation on some of these factors, and B, private sector lenders begin to lick their chops again and say, hey, the investor market, they're doing, hundreds of thousands of loans every year of people buying investment properties and renting them out. And right now, nobody's competing aggressively for that business. And so you're going to see mortgage companies begin to get aggressive by going after people just like you and saying, hey, we'll loan you 10 more and we'll make it easier for you to be able to get the money. So things will get better, I think, very shortly. All right, so thank you. I appreciate the call. I hope that helped. All right, so we're going to go to a break now. If you want to call us for the next segment, the number here is 800-848-WABC. What's that? Yes, and we have a guest. We're going to be talking to the top real estate guy in Jacksonville, Florida. So it's going to be terrific. Stay tuned. Rand on Real Estate, back in a minute. What I want to do is I want to welcome some of the new affiliates of the Own America Network. You're listening to Randon Real Estate, which is brought to you by the Own America Network. We're proud to welcome our new affiliates this month, Century 21 Begans in Tampa, Capstone Residential in Jacksonville, Coldwell Banker Preferred in Las Vegas, RE/MAX Advantage in Las Vegas, ERA Real Estate throughout Central New Jersey, Coldwell Banker Coastal Alliance in Orange County, California, ERA Caputo in Nassau County, New York, RE/MAX of Barrington in Chicago, RE/MAX Properties in Colorado Springs, RE/MAX Best Choice in St. Louis, Watson Realty Group in Jacksonville, and of course Better Homes and Gardens, Rand Realty, my family business. If you'd like to bring the Own America Network to a town near you, call us at 888-332-7722.
We love the weekends as much as you do.